Mid-term.
Good morning, everyone. We are seeing some bounce back after 2, 3 days of fall, and US market has come back, and that too mainly driven by the tech stock, and Nasdaq is up over 1.5%, leading to S&P also moving up, but the Dow was up marginally. What we are seeing that the similar thing is getting reflected into Asian market as well. Asian market are also indicating some positive trends in some of the market. Uh, Whereas commodity, which has seen sharp correction yesterday evening, is seeing some bounce back in today's morning. Aluminum, Brent oil is still down by around 0.5%. Even iron ore today morning is down by around 2% and steel 1%, but aluminum is seeing some bounce back. Uh, so overall, what we see that today the market will be driven by the budget, and few of the expectation on the budget is that whatever the budget government has presented for interim budget, there could be some changes because RBI, the central government has got substantial amount of dividend from the RBI, which suggests that there is enough money which is available with the government to be spent on some populist measures and still not disturbing the core their capital expenditures. So we had seen that in interim budget, capital expenditure was targeted to grow at 17% from the revised estimates of last year. So that can continue in this period without disturbing the fiscal deficit, uh, which was at around 5.1%. So let us see what it comes. There are some concerns about increasing tax rate on something related to equity market. We expect that there is no necessity as such for the government to come up with that, as they got enough fiscal cushion for the populist measures. And still there could be some relief for the personal spending, and there could be increase in the tax rate slab, so that can have a positive impact on consumptions. So the measures, what we had seen from the outcome of the election, there could be some larger measures by the government for supporting the lower end of the populations. And in that, this tax exemption is one of the point. And apart from that, our government may be looking for increasing the consumption and income to the lower end of the people. So that is what we see, that the things are likely to be normal and the continuation of what has happened in the interim budget. Now request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, even likely to witness some volatile trading session ahead of a budget. Now, on the technical front, we are witnessing that the Nifty is just have taken a very good support of nearby its 20 DM, and yesterday we have seen a bounce back from 24,350 towards 24,595 levels, maintained a good closing about 24,500, which gives some sort of a cautious sign. Going ahead, if Nifty surpasses 24,600 will act as a crucial resistance level. Any move above that level will extend this pullback rally towards 24,740 to 24,900 levels on the high side. Whereas on the lower side, as of now, the immediate support is placed at around 24,370, 24,300 levels. That is the crucial support levels. Overall, we are likely to witness some stock specific momentum during a day ahead of a budget itself. So, and zigzag momentums can be seen. So, try to avoid major longs or major shorts, but definitely you can trade the trend, but with the strict stop losses. Coming towards the bank nifty, for today intraday purpose, the first resistance is placed at around 52,640. Above that level, 53,000, 53,270 levels can be seen on the high side. Whereas the support is placed at around 52,000 is the initial psychological first support level. If it's break that level, then profit booking is likely to be seen, and which might take a bank nifty towards 51,700 levels. Coming towards the fin nifty, 23,760, 23,860 are the resistance level, whereas the support is placed at around 23,500 and 23,370. As of now, we are not initiating any pre-market calls. We'll watch the market and accordingly we'll initiate a buy or the sell call depend upon the market momentum. That's it from my end. I request Amit to take a call forward.
Yeah, thank you. Good morning, everyone. So on the derivatives front, if you look at the overall data point from the Y perspective, we are seeing that from last 2 days of trading session, Nifty has been showing some profit booking from the upper end, but still from the FI front, we are seeing that the buying has been continued in the market. As we are seeing that today the budget day is there, and on the budget day we have always seen that the range for the Nifty almost tends to be around 1.5 to 2% movement on the either side. So the range for the Nifty or the intraday front will be 24,800 to for 25,000 on the upper end, and the 24,000 will be on the lower end. The support will be lie at that point. So the range will be very high in today's session. The volatility will be intact. So on the OI front, we are seeing a 24,500 level on the weekly basis. The position of call writer is very high. Once if Nifty gets a clearance of 24,500 level and the stability gets and the closing comes about that level, then we might see some fresh buying again opportunity in the market. Currently, from last 2 days of a trading session, we are seeing that the Nifty has shown some profit booking, but on the downside, again at 24,300 level will act as an important next support for the market. Once if Nifty goes below 24,300 level in today's day of trading session with the closing basis, then we might see some Nifty to go on the downside towards the 24,000 level, where we will see major liquidation from the monthly basis on the Nifty front of the put writer positions toward 24,000 markers. So 24,300 will act as an important supportive zone for the Nifty from now onwards. While PCROI, while India VIX yesterday shooted up sharply by 4%, giving close of 15.44 due to the event which is being placed in today's session. Once the event gets over, we might see India VIX to again come down towards the 14 to 13.5 level. So in today's session, India VIX can go on upside towards 17.5 to 18 level. So till the time budget gets over, after that we will initiate a new long positions on the Nifty front. While on the stock specific front, the selective counter which we are seeing that the fresh long position has been continuously getting added on. First one will be PI Industry. From last 3 to 4 days of trading session, we are seeing that on PI Industry the long positions are continuously getting added up. And in yesterday's session, the breakout has been witnessed. We are expecting PI Industry to show some strong strength upside towards the 4,200 to 4,300 level in today's day of a trading session. Another counter that looks positive in today's session will be MGL, India Mart, and IPCA Lab. These three counter looks positive in today's trading session. So that's it from Reddit front. Thank you.
Good morning. Federal Bank, there is news that RBI has approved appointment of Mr. KV Subramaniam as the MD and CEO of the bank for a period of 3 years starting September. He was the joint MD of Kotak Mahindra Bank until April this year, and he was heading corporate commercial banking, private banking, and asset reconstruction businesses. So this will be seen as a positive for Federal Bank. Jana Small Finance Bank result is okay. Advances grew by 25% year on year, 4% sequentially. NIM was stable at 8%. Credit cost also remained elevated at existing run rate of 3%. Profit before tax was flattish quarter on quarter. There was a big tax reversal in Q4, and thus QOQ the profit looks weaker, but that's not the case. One negative thing was that we have seen even in the results of credit access that NPAs have risen significantly in these sort of MFI companies. So GNPA in case of Jana has gone up from 2.1 to 2.6, net NPA from almost 0.5 to 1%. So that's why we are neutral on the bank. Cyan DLM result is in line with expectation. Revenue was up 19% year on year. However, EBITDA margin is contracted from last year's 9% to this year 7.8%, and that's why the EBITDA was a flattish year on year. PBT is also flat, but due to other income and interest on cash balances, you can see that profit after tax has doubled on a YOY basis, but that should be ignored, and basically at PBT level it's flattish. Despite slow execution in the revenue front, the order book has come down consistently over last 5 quarters. So last year June quarter it was at 2,500 crore. This year in June quarter at 2,100 crore. So one can avoid the stock. Thank you.
Good morning. Yesterday, Rosari Biotech had hosted the con call. In terms of the results were okay. Revenue grew by 19% on a YY basis, and the overall growth was led by the volume growth, mainly in HPPC and textile specialty chemical segment. During the quarter, there was an improvement on the gross profit level, where the gross margins were up by 89 basis points on a YY basis. However, operating performance was impacted due to one-off overheads, such as there was a high maintenance charges with regards to the TriStar plant and some other expenses based on the HR transformation initiative and traveling and exhibitions. Overall, EBITDA margin reported at 13.3% versus 13.5% in the last quarter. The management highlighted that company's core ethoxylation facilities operating at peak utilization. However, blended utilization stood at approximately 55%, and that provides a good potential growth with the existing capacity. Uh, Also, it has planned expansion projects of ethoxylation and Dahej, which are on track to get commissioned in a phased manner during FY25. And these projects have a peak revenue potential of rupees 400 crore. The stock is trading at a PE of 23 times to FY26 EPS, and we are positive on the stock. On the result front, Dodla Dairy Limited posted the results, and results were ahead of expectations. Revenue grew by 11% on a YY basis and 16% on a sequential basis. Company's domestic business grew by 8.5%, and international business has seen the growth of 38%. Gross margins has seen the improvement from 24% in quarter one of FY24 to 29% in quarter one FY25. On operating level, the margins were at 11.5% versus the expectation of 10.5%. The stock is trading at a PE of 34 times to FY25 EPS. Thank you.
Good morning, everyone. Yesterday we attended a phone call of JK Cement. The results were below expectation, and so the sales volume came at 4.9 million ton versus the expectation was also the same, and quarter on quarter there was a decline. Realization in rupees per ton came for at rupees 5,729 rupees versus expectation of 5,654. Quarter on quarter, there was a dip. EBITDA per ton came at 997 versus expectation of 1107. Quarter on quarter, it was 1077. EBITDA per ton was down quarter on quarter on account of lower realizations, which was not fully not fully offset by lower fuel prices and logistics cost. The current capacity of the company is 24 million ton. The company is targeting the capacity of having 30 million ton by FY26. For the additional 6 million ton capacity, company is having various projects in states like UP, MP, Bihar, Karnataka, and the projects are on track. The company has also given a cost savings guidance. It expects to save in cost of approximately 150 per ton over the next 2 to 3 years. Rupees 75 per ton is seen in this current financial year and the balance in the next years. In the paints business, company says that the pricing may remain under pressure due to competitive intensity. Management has also said that the cement prices are under pressure. For Q2 also prices would be lower than Q1. And management expects that by September there should be huge demand and pricing environment should improve. Fuel prices are softening. Management expects going forward, the fuel prices should be $10 cheaper. Management has also given a volume growth guidance. They said that it would be 20% for FY25, even after a subdued Q1. So overall, Q2 will be tough because of prices being soft, and also other expenses will be higher on certain branding expenses and maintenance and shutdown costs. The stock is trading at an EV to EBITDA of 13.6 times FY26 EBITDA. So overall, looking at JK Cement and their EBITDA per ton and realization, the metrics are promising, but due to soft Q2 and the overall industry outlook, we are neutral in the near term. Thank you.
Yeah, apart from this, Suzlon came up with the numbers, and numbers were quite strong. The order booking also came at 3.8 gigawatt versus last quarter 2.9 gigawatt and last year 1.4 gigawatt. So that indicate that the implementation could be strong in the coming period. This quarter, the overall implementation was of 275 megawatt. So the run rate, if we take then 1 gigawatt, they can implement in this way. But the order booking is 3.8 gigawatts, so very strong. So that indicate that in the balance period, the implementation will be very strong. Another point which was quite positive in this quarter is the EBIT margin in their BTG segment, that is the tower business segment. EBIT margin has turned quite positive, and it has come at 8.3% versus quarter-on-quarter 4.3% and year-on-year 0.7%. So if this sustained, then the profitability will improve substantially for Suzlon Energy in the coming period. So overall outlook seems positive from here for Suzlon Energy. Apart from that, Coforge has announced the result, and result is in line with expectations. Today morning they had announced. There are one-off in the result, and that's why the result looks subdued. They had acquired Cigniti company, and there is an acquisition cost which has been put into this result. Excluding that, the margins are stable. EBIT margin is 17.9% versus expectation of 16.7%. And dollar revenue growth came in at 1.6%, which was the expectation. So overall result is in line with the expectations. Then another company, which is Gensa Technology, has reported numbers which were above expectations. Here, the revenue increased by 4.7% quarter-on-quarter in rupee terms. And EBITDA margin also came a bit lower at 15.5%, maybe because of the salary increase in this quarter against expectation of 7%. But the revenue growth is attractive and is higher than expectations. As such, the result is above expectations. So that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might see some pullback in commodities. Gold, one can initiate a buy around 70 to 700 levels and maintain a stop loss of 70 to 450. On upside, it can test 73,000, 73,200, whereby again profit taking is advisable. In silver, if prices are sustaining above 88,800, then we expect a pullback till 90,000, 90,500. And one should take profit maintaining a stop loss of 88,000. In metals, copper is likely to hold 810 support area. So buying till 820, 821 is expected. One should maintain a stop loss of 805. And zinc also yesterday had witnessed a recovery from the lows, and we expect the momentum to continue. So buying around 262 is recommended with a stop loss of 260. On upside 264, 265 we are expecting. And in crude oil, prices can test 6,500, whereby some pullback is expected. So for trading purpose, buy with a stop loss of 64.30. And again on upside 66.50, 6,700, one can initiate a sell also with a stop loss of 67.60. And natural gas, one can buy around 185, 183 and maintain a stop loss of 177. On upside, it is expected to test 195, 202 levels. 202 though is a strong resistance area, so one should take profit around these levels. That's it from us. Thank you very much.